Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Mathew. This show gets you answers to all of your stock-related questions, whether they're short-term technical in nature or long-term portfolio or fundamental in nature. We've got you covered. Just send a message to us on that number that you see on the bottom of your screen, and we will try and get it answered over the course of the next half an hour. Very quickly, let's take a look at where the markets are right now. And in fact, you have very narrow ranges for the benchmark Nifty 50. It is currently trading in a very tight band, currently higher by about 0.1% or thereabouts and holding about 25,000. And it's currently very close to 25,100. The broader markets are also a little bit listless in trade today, but mid-cap index holding on to gains up about 0.5% or thereabouts, and the small-cap index just about flat right now. Let's also take a very quick check of the market breadth and see what the advanced decline ratio is indicating. As things stand, it's not too far away from even Stevens. Of course, on the global context, you have a lot that is hanging in the balance. You have inflation data that will come out later in the week for the US markets, and you also have next week the outcome of the FOMC meeting, or the Fed decision on interest rates, where the Fed is expected to cut rates. So globally, there's a little bit of wait and watch, and that seems to be panning out for us here in India as well. What you see on the screen is the Nifty contribution, the stocks that are leading and that are declining in trade, and Tata Motors on the downside is one of the key contributors to where we are standing on the Nifty 50 right now. ONGC, ICICI Bank and Hindalco among the other losers. Among the gainers, you have Bajaj Auto. Not too much to speak of in terms of the fundamental reason for this gain, but it is one of the outperformers in trade today. Now, apart from that, of course, there is crude oil to focus on. Crude has fallen below $70 to the barrel. I'm talking about Brent crude. Earlier on in the session, you had crude-sensitive stocks that were gaining, but they have given up some of those gains right now. In fact, a few of the oil marketing companies trading in the red, BPCL on your screen right now. We are focusing on Tata Motors and talking about the UBS note, which is looked at as the potential reason for the drop in the price. It's down about 5.6%, and at the low point of the day, there are concerns about Jaguar Land Rover. Puneet has this report to tell you about what exactly UBS is saying.
So definitely, negative for Tata Motors, and, stock is reacting on this UBS note. Now, this note specifically talks about, the JLR division of the company and how the higher discounts that they're offering now will be a key negative going forward as well. They have mentioned that, the Range Rover Sport has seen a very sharp and a surprise rise in discounts in the month of July globally as well that they've announced. It mentioned that, the company has launched these three models, the Defender as well as the two Range Rovers back in 2020, and over the last 3 to 4 years, they've seen successful rollouts of the same, but now that momentum seems to have slowed down, and new launches will only be happening in the next year when JLR comes up with the electric vehicles going forward as well. Now they're transitioning away from petrol and diesel completely, so that's one of the key things also to watch out for, that they will have to support growth only through pricing mechanisms going forward. Now order book is another key metric tracked here. It's at a record low pre-COVID. It's touched the low which it had seen last in 2019 itself, so that's another key thing to watch out for, that the growth momentum hasn't come forward. They have mentioned that average selling prices of their cars also has gone up by roughly 49% compared to 4 years ago, and now they will have to start moderating them going forward as well because of the affordability factor, as well as customer having a larger choice as well with competitors. Finally, they have mentioned that they wouldn't be surprised to see some discounts on the Range Rover as well as it's currently at near zero levels of discount on one particular model, the top one, and they are saying that they might be seeing on that. Finally, valuations, they see JLR at roughly 7 times price to earnings, and are seeing 10 to 14 times EV by EBITDA for the CV as well as the passenger vehicle division. Both of them are slightly in the struggling zone right now, and recovery is only penciled in the second half. So overall, slightly negative picture on India business, and JLR, they have mentioned that it's not a good time for the company itself. Back to you.
All right. Thanks so much for that, Puneet. Let's introduce our guest for the day. We've got Sunny Agarwal, who's Head of Fundamental Research at SBICAP Securities, and Vaishali Parekh, who's the Vice President Technical Research at Prabhudas, Lilladher. Thank you so much to the both of you, as always, for taking the time. Sunny, I'll come to you very quickly on Tata Motors. Down in the dumps today, but it's actually gained quite handsomely over the past couple of years. Would you say that it's a buying opportunity, or do you think that the concerns that have been raised by UBS are certainly something to bear in mind? Would you avoid right now?
Yeah, good morning, everyone, and thanks for having me on the show. I think all the factors which UBS Note has discussed were already known to the street post quarter one results. So we are already the street was expecting that there may be there may be subdued demand as far as JLR portfolio is concerned. Passenger vehicle anyway was posting a subdued number. Commercial vehicle was something which was doing well. And everything was in price. Yes, you rightly pointed out that stock has rallied significantly over the last 1.5 year. And at 1,000 rupees, the upside is very limited. I believe the fair value of the business, the consensus estimate is close to 1100, 1150. And the recent trend of the discount on the passenger vehicle portfolio, that is on the back of significant inventory in the system. And as we approach the Shraddh period, which is the second half of September month, definitely further sales may be impacted for the month of September. But what I believe that this discounting may be a temporary phenomenon ahead of festival season, and post Shraddh period, maybe in the month of October from Navratri onward, we may see a discount going away once the channel inventory is corrected. So we continue to remain neutral as far as Tata Motors is concerned, and we find opportunity in two-wheeler auto space. So companies like TVS Motor, Bajaj Auto continue to remain our top pick within the auto space. And the same can be rided through auto ancillary companies which are getting to two-wheeler industry. So companies like CAM or for that matter, Minda looks good.
Fair point. Let's jump to the queries now. And there are quite a few that have come through. And by the way, if you're writing for the first time, do tell us your name and where you're tuning in from. The first question we're taking is from Rose. Rose is writing from Kerala, and she's asking about Dixon Technology. She's wondering whether this is a good time to buy for the short term. I'm coming to you, Vaishali, on the charts. How does it look?
Yeah, very good morning. I think Dixon Technology has already got into the momentum, and we have been seeing this spurt coming right since yesterday. So I would say, 12,400 acts as a good support. So if she's ready to take this as a stop loss, I think she can buy this, because we are looking at a target of 13,200 from here on.
I'm actually pulling up the next conversation. In fact, we've got a question coming in from Vinod from Chennai, and he's asking about Mindtech. Let me just pull up the chart and see where it's currently trading. Mindtech is currently at 380. He's planning to invest in this for the next 2 years or thereabouts. Sunny, not something with a large amount of volume, but it's done pretty well for itself over the last 6 months. Do you have coverage, and would you suggest a fresh entry for the next 2 years?
Yeah, so we don't have an active coverage on the company, but just I was looking at the financial numbers, and the company has been consistently generating profit close to 30, 27, 28, 30 crore on an annual basis into the IT business, trading at 33 times price to earning multiple. I think looking at the kind of flattish growth during the last 2 years, I would recommend not to invest in Mindtech. There are many other better IT companies which are available, and where the growth prospect continue to remain healthy in the mid-size or smaller size IT companies.
Okay, fair point. I do have to interrupt the queries because we're getting breaking news, and this is on SpiceJet. The stock is not doing too much in trade today, up about 0.7% or thereabouts, or about 0.5% right now. It's just coming in that the Delhi High Court has now refused to quash an earlier order on the, that required the grounding of 3 of SpiceJet's engines. Remember, the single judge bench had in fact passed an order on the 14th of August directing SpiceJet to ground 3 aircraft leased from, the engines of which were leased from 2 French lessors. To find out about the latest development, I'm joined by Charu. Charu, what is the High Court saying?
Good morning, Alex. So, as we saw, a division bench, that is a 2-judge bench of Delhi High Court, refused to interfere with a single-judge bench order that had asked SpiceJet to ground 3 of its engines because it had not paid its dues to France-based lessors. The court had earlier also said that if you do not have the means to pay for the aircraft, then you should either not use them or ask your directors to, take a personal guarantee. However, that did not work out. They appealed the order, and the division bench has said that it is not inclined to entertain this appeal at all, and has also advised the airline to settle the matter with its clients, which are the 2 France-based lessors.
Fair point. All right, it's certainly one to track. And there's a lot of buzz about SpiceJet, including the conversion of debt to equity by one of the creditors. Let's talk about the next question. Santosh from Bengaluru is holding Zen Technologies and 85 shares at a price of 500 rupees. He's wondering whether to hold on or should he book profits. It's considerable profit of close to ₹1,00,000. Vaishali, coming to you on this one on the charts, how does it look?
I think, for near term, there is some consolidation happening, but as long as 1500 levels are held on, I think this can get into new round of momentum and perhaps go towards 1850, 1900. So I would say keep a stop loss of 1500 and hold the stock.
Okay. All right. The next is also a short-term question. I'm coming back to you, Vaishali, on Hindustan Zinc. This is a question coming in from Nidhi. And Nidhi has already bought at prices of 512. Incidentally, I've been tracking the underlying, and that's also something that has a bearing on the prices of this stock, on the price of this stock. The stock has done pretty well over the last half a year or thereabouts, gaining over 50%. She has lost a little ground though, Vaishali. Would you suggest holding on?
I would say so because I think, it is currently at a crucial support level. And even if it corrects further, the downside, according to me, is very limited towards 450. So I would say continue adding more. And because once the metal pack and Hindustan Zinc continues to get into a new move, I think this can go towards 650, 700 from here on.
650, 700 is on the cards for Hindustan Zinc. Jigar from Ahmedabad in Gujarat is asking the next question. We spoke about it briefly. BPCL, it's given up gains intraday today. He's already bought at levels of 235.5. So he is making money, is holding it on for the long term, looks like. Sunny, on the fundamentals, there's been a lot that is said about crude oil prices and the softness in the prices in the recent past. What does this mean for a company like BPCL? Would you hold for the long term?
I would. If you are a really long-term investor, I would suggest continue to holding on to the entire oil marketing company level space, whether it is HP, BP or IC. Although in the short term, you may see a volatility in the earning based on the fluctuation in crude oil prices. So to some extent, yes, their marketing division may benefit in case the retail prices of petrol and diesel are held on to, or in case they are cut. Despite of that, we may see increase in marketing margin. However, of late, we have seen some correction in Singapore GRM, which will hurt their refinery business to some extent in the September quarter. But in terms of valuation, I believe the entire OMC space is trading at a very favorable valuation and risk reward continue to look favorable. And I would recommend, in case you are a long-term investor having a vision of more than 24 months, continue to remain invested in BPCL.
Okay, the next question is on DCX specifically. The defense company is currently trading at 332 or thereabouts. And it's also about the rest of the defense space. This is from Karna. And he's asking about a one-year perspective on this counter. It's not done too much, considering, Vaishali, the kind of runs that you've seen in some of the other companies in the defense space. He's asking whether to hold on to this one for the prospect of gains, or should he switch to another defense company, or should he avoid it altogether? That last bit is my question.
I would say actually the stock is gradually showing signs of improvement. And even if I'm seeing the weekly chart, because the person who wants to hold it is for a long time, I believe. So I would say it is currently at a very good support level. And if whole of defense pack also starts moving, I think this should also gather momentum. And this can go to 400, 450 to start with. So I would say 300 should act as a stop loss. It would negate my view of an upward trend if 300 levels break.
I want a quick follow-up on BPCL because I was hoping that Sai's question from Andhra Pradesh would be answered. But Sunny gave a fundamental view on the stock. This is for a short-term view, Vaishali, 1 to 2 months. He's asking about a specific trade. He's bought at prices of 351. He's got 700 shares. Should he hold or exit from a perspective of 1 to 2 months?
So let's keep today's low as stop loss, because if we see a close below 340, this can slide towards 320 to 300 levels. So currently it is just holding on. We've just seen a bearish candle occurrence today, but I think it should bounce back from here on.
Major BV Naik from Pune has tuned in and is asking about Titan Company. Incidentally, it's quite a popular stock to be held in long-term portfolios, but we've not been getting too many questions about it. But take a look at that gain. And this is what happens when you hold for the long term in a stock that has outperformed, right? He's bought at an average price of 62 rupees, which means that he's been holding for a very, very long period of time. His gains are over 1 crore of rupees. Should he add more? Should he book some profits? What's the view on the fundamentals? Sunny, it gives me a lot of pleasure to ask questions like this. Would you keep holding or would you add at the current level?
Yeah, I think we continue to remain constructive on jewelry as a space, and there is no doubt that Titan is the market leader as far as organized jewelry segment is concerned, and continue to do well. Will continue to command a premium valuation compared to smaller regional players like Kalyan or, for that matter, Senco. Yes, I would recommend you can continue to hold Titan from a long-term perspective. In addition to that, in case you want to deploy a fresh capital, Senco Gold is the one company which is under our active coverage, and that can also be looked upon for a 15 to 20% kind of gain over the next 12 months within the jewelry sector.
Okay, Sumit has got the next question, and he's asking whether to buy Suzlon and what the strategy here should be. We've spoken at length about the fundamentals in recent shows, so I want to talk to Vaishali about the technicals. Right now, there are no sellers in the stock. The stock is at upper circuit at 81.95. Would you suggest buying when the opportunity arises? Seems like it's a very strong move.
I would agree so, because we have seen that the stock has made the previous high what we saw at around 84, and currently it's again approaching. So in between we saw a breather at 77 levels, and that was an ideal level to get into the stock. However, if now it's on an upper circuit, I think so maybe if a dip one gets a chance, can buy more, and I think this can go towards 88, can reach the previous high and go towards 88.90. So it's a positive view from my side.
Positive view, all right. It has been mentioned though that on the fundamentals and on the valuations, it's a little stretch to say the very least, and that capacity utilization will need to take place at an accelerated pace over the next year and a half to 2 years for the valuations to be justified. That has been said. All right, let's talk about Srinivasa Rao's question. He's writing in from Vijayawada. He's asking for a specific view on Indraprastha Medical for the long term. He's holding at levels of 265, and he's wondering what to do with this stock. He's making quite a substantial gain, as much as 7 lakh in this particular investment. Sunny, what's the view on this company from the fundamental perspective, and would you add more at the current price?
Yeah, I think the company continue to do well, and I would recommend that continue to remain invested in the entire hospital as a segment, continue to do well as a sector, and within that, Indraprastha has also delivered a fantastic set of numbers. So basically, it's a JV between APL Apollo and Delhi government, and we continue to remain bullish on Indraprastha as an investment idea.
Okay, fair point. All right, we've got Ruchika from Bengaluru who's asking about Yes Bank, and quite a few people want to know about this particular counter. 1 to 2 year outlook is being sought. Actually, I'm going to make an exception and take a question both to my fundamental and technical expert, because there are so many questions about Yes Bank. Sunny, is there a case to be made to buy into Yes Bank? There are several other banks that have been spoken about over the last several months. People have said that valuations are attractive, particularly for banks, and from the long-term perspective, people have suggested several names, the likes of which we've talked about, even HDFC Bank, we've talked about State Bank of India. Of course, you can't speak about State Bank of India, but would you buy Yes Bank right now?
Sorry, Alex, even I can't speak about Yes Bank being an associate company of SBI.
Oh, yeah,
but yeah.
I completely forgot. Sorry. All right. No, that's a fair point. Let me take a question to the technical expert then. Vaishali, what would you do with Yes Bank at close to 22 levels?
Well, I would not. Actually, if one has to, then, a calculated risk can be taken with 20s of stop loss. But I think the conviction to get into the trade also will be about 25 rupees, because that is where the near-term resistance is. So if we see the stock moving about 25, we can gather some conviction that, yes, it's ready to take off towards 28 and 30. But at this juncture, if one needs to buy just a calculated risk, stop loss win.
All right. Janaki has got this next question, and she's writing in from Telangana and asking about Shilpa Medicare. She's bought as many as 50 shares at a price of 553. Should she hold or exit is a question. It's a decent profit, and the stock is doing quite well for itself in trade today. In fact, it's seen quite a bit of a pop about midway through the session so far. The question is, what's the strategy that you would employ based on the charts? Vaishali, how does this look?
So long-term chart, of course, looks very good. Even the breakout has occurred even on a monthly chart. But well, no harm booking partial profit and taking advantage that when the stock dips again, can re-enter, because already chart of all periodicities are in the overbought zone. So some profit booking at any juncture cannot be ruled out. But yes, some partial profit booking and then again get into the stock, because long-term view remains intact, that it's positive.
All right. I'm going to try and pull up this stock. Reflex is the name of the stock. In fact, it's Reflex Industries with a market capitalization of about 5,000 crore rupees. The stock is up about 2.7% in trade today. We've got Ravi from Chennai who wants to know whether he should buy a huge quantity. He has not defined what this huge quantity is, but he's holding at a price of 359. The stock is currently trading above that. Sunny, any chance you have a fundamental coverage on this, and would you suggest buying a huge quantity?
We don't have an active coverage, but let me just share my view. So I believe the company is more into the coal and ash handling, and is one of the leading supplier of HFC, which is hydrofluorocarbon refrigerant gases in India. So predominantly, I believe the majority of the contribution right now is coming from coal and ash handling segment, and that has contributed to the growth. So currently trading at a price to earning multiple of close to 50 times trailing 12 months. So I think I would like to avoid companies which are into trading business and trading at 50 times price to earning multiple. In fact, if somebody is sitting on profit, I would recommend to book a partial profit at in this current upward momentum.
And Ravi is that individual. Would you have a view on this, Vaishali? I'm quickly throwing it to you as well. Reflex.
I think it's really run up. I would not, though the stock can move, but technically it doesn't call for a aggressive buy at these levels. I would not go for that, but continue holding with the trailing stop loss.
Okay. Both of you, I'm going to try something new with you today, and that is a rapid fire round. We have about 2 minutes. I will read the question out, and if possible, give me a short answer. If you have a view, of course, if you don't have a view, you can tell me that is the case. Let's try it out. If it works, so be it. We've got Morpen Labs, which is the first counter that we're talking about. Shreyas writing in from Bhubaneswar. He's bought at levels of 64 rupees. The stock is trading above that price, close to 100. Sunny, on the fundamentals, would you hold on to this?
Yeah, I would like to hold on to the Morpen Lab. Only the one caveat, historically Morpen has guided for something and has not been able to consistently deliver on numbers. So that's the only caveat which I would like to maintain and would like to track during the September quarter numbers.
Fair point. Watch the earnings. Exide Industries, the next counter. This is a question from Vellore. It's, all right, Praveen. Would you hold for the long term, Sunny?
Yes, in fact, it's a good opportunity to add in the portfolio post the recent correction from the top and write the story for next 12 to 18 months.
Carousel, C-A-R-Y-S-I-L is the name of the counter. Vaishali, I'm coming to you on this one. Krupa is asking whether to hold on. She's bought at levels of 890, which is above the current market price of 877.
I would say yes, continue holding because it's in the process of higher bottom formation. The near-term resistance comes at 940. Above that, we could see higher targets. So that would be the strategy.
All right, a minute to go. Tata Chemicals is the next counter. Dilesh is asking about this. He's bought at levels of 324. He's wondering whether to hold for 10 years. Very long time frame. Sunny, would you say yes?
Yes, no doubt. I mean, being from a Tata stable, there is no doubt that you should hold on to the company if you've got a vision of 10 years. But short term, definitely soda ash prices are under pressure because of oversupply from China, and that may keep the stock in a certain range for maybe 3 to 6 months.
Okay, Gensol Engineering. This one's coming to you, Vaishali. It's a question from Jaya, who's writing in from Bengaluru. She's bought at levels of 1,045, and she sees support at prices of 917. Would you agree?
Well, right now it is 924. I would say let's be a bit more liberal with the stop loss, and I think 900 should be acting as a stop loss. And confirmation only about 945 to 950 for an uptrend.
All right. Thank you so much for participating in that last segment as well. Absolute pleasure having the both of you on the show. As always, thank you so much for taking the time. And viewers, we've tried to give you answers to as many questions as we possibly could today. There are, of course, a lot of you who have not gotten an answer, and we will be back tomorrow to take some of them. Do stay tuned. Lots more coming up on NDTV Profit.
to Hot Money. This is Mahima Vachharjani, where before we take a look at how the interesting stocks that we're going to look to today. Let's take a quick check on what the markets are doing. Let's pull up the Nifty 50 and see what the index is doing in trade today. It has started gaining momentum and it's trading within a range of roughly 100 odd points. Currently trading at 0.17% higher. Let's also pull up Sensex. Sensex is also trading in line with the Nifty 50 and it has a wide range of roughly 340 odd points. Let's also quickly pull up the broader markets and see what they are doing in trade today. The broader markets did see some kind of pressure in the start of the trade. However, they've picked up momentum since then. The mid cap 150 is up around 0.5%. The small cap 250, however, is still under pressure. It did take some kind of momentum in between 1130 or so, but right now it's down around 0.07%. Let's pull up Bank Nifty and see where is the Bank Nifty trading at, what are the levels like. Where the Bank Nifty was trading flat in the start, however, it is now seeing some profit booking down around 0.2%, and it has come down from the 51,200 levels to below 51,170 levels. Let's pull up the Nifty contributors and see what are the stocks that are weighing down on the Nifty and weighing up on the Nifty. There you go. There are stocks like Bajaj Finance, Bajaj Auto, RIL, and Bharti Airtel are some of the counters that are buzzing in trade today and are some of the stocks that are weighing up on the Nifty. Of course, it's important to note here that all the Bajaj group stocks have been buzzing on the back of the IPO, that is Bajaj Housing IPO, which is the last day for subscription today. Some counters, however, that are pulling down the Nifty is Tata Motors, ICICI Bank, ONGC, HDFC. And let's pull up the breadth of the market and see what the advanced decline ratio looks like, where the advanced decline ratio is pretty much almost 1:1, where we are seeing around 1100 odd advances versus 980 odd declines, so slightly above that 1:1 mark. However, the gap between the advance and decline ratio has been narrowing throughout the day. Let's also pull up the sectoral chart and see what are some of the sectors that are buzzing in trade. There's Nifty FMCG, which is up around 1%. Nifty Pharma is also up around 0.8%. Nifty IT is also doing well. It's the third day of gain for both Nifty FMCG and Nifty IT. So defensives are taking over the markets, recently. But let's move on and let's welcome aboard Vinit Bolinchkar from Venture Securities, who will be joining us in this show and giving his perspective on the stocks that we're going to talk about. But before I come to you, Vineet, Mihika is joining in, and crude prices have taken a hit, and she'll give us a perspective as to what is happening there. Mihika?
Yes, Brent crude prices, a volatile, price trajectory and a negative price trajectory since the last week of August. Yesterday, they slipped 4.4% to $68.68 per barrel, marking a 33-month low. This is the lowest, the market has seen since December of 2021. Prices are now down 19% since July start, 9% year to date, and over 23% down in the past 1 year. Now, when you talk about why prices fell, well, it was the OPEC who cut their demand estimate for 2024 in their latest monthly oil report. The estimate was cut to 2.03 million barrels per day versus 2.11 million barrels per day earlier. They also cut the 2025 global demand growth estimate down to 1.74 million barrels per day. An oversupply scare in early August, lingering concerns of the US recession combined with the continued slowed economic growth in China have hurt the demand outlook for oil. When you talk about Chinese economy data, like the demand concerns for one of the largest oil consumers in the world have been weighing down prices for a while now. The latest economic data on Tuesday showed disappointing numbers in terms of Chinese imports. And lastly, all of this is happening in an oversupplied market. Now, the OPEC Plus did delay their plan to boost the global oil production to the end of 2024. It was first supposed to happen in October. But despite this, it did not have any material impact in terms of, prices kind of stabilizing above. And the market is oversupplied despite a 2.2 million barrel per day voluntary production cut. And this is mainly because the US is currently producing record amount of oil. August data showed 13 million barrels per day of output, which is nearly double the 2014 oil production of the country.
All right, Mika, thank you so much for giving us those details. Vinit, I'll come to you on some of these counters, that are buzzing on the back of crude impact, ONGC, Oil India. Your perspective on the overall impact of, the crude prices coming down and also on counters like ONGC and Oil India.
So ONGC, Oil India are obviously going to face the brunt, right? Because the prices are falling, the average realizations go down. But, ONGC is better positioned to offset this because, they're going to have a very large production profile coming up, new finds which are seeing the light of day. To that extent, it will get cushioned out. IOL benefits from the fact that it is a large base of, gas. So while prices have come off, we don't think that the prices can go down too much from these levels, and around this level of 270, 275, ONGC definitely looks to be a stock that could be nibbled at.
All right. Vineet, because of falling crude prices, there are a lot of beneficiaries to this as well. For example, there's paint companies where crude is raw material. The cost of crude roughly makes 30 to 35% of their overall, raw material. And they also use crude derivatives. And some of the companies that are, reacting positively to this news include Indigo Paints, Asian Paints, Kansai Nerolac, and Berger Paints as well. Plus, there's aviation companies that could benefit from this. So stocks like Indigo, SpiceJet as well. And then there are tire companies where they use crude derivatives for raw materials like synthetic rubber, chemicals, carbon black, and this roughly again amounts to roughly 30 to 35% of their overall raw material prices. So companies like Apollo Tires, JK Tires, Seat could benefit from this. And then there's lubricants where US crude oil derivatives like base oil and additives are used for these lubricants. And a fall in crude prices could possibly, impact the overall profitability as well as margins for all of these beneficiaries. So, your perspective on paint companies, tire companies, lubricant companies.
So, if we could rank these in pecking order, then I think tire companies score above lubricants and paint companies. The reason being that, we've got a very strong export market. Our costs are very cheap and, we are very cost competitive. And so I believe that all these companies could benefit that you mentioned. Not to forget Balkrishna Tires, one of the very, very good companies that could benefit from the falling crude prices. Second in line is the lube companies, because here the effect will come with a lag. The base oil will kind of cool off over a period of 3 to 6 months, so that there would be a lag effect. And for the paints, while definitely it's a great situation where the 33% of cost is coming off. The problem is that, there is too much cutthroat competition in the segment, with new players like Grasim and JSW, trying to garner bigger pies. So it will definitely help these companies. But as I said, the pecking order would be tires, your loops, and then we come to the paints.
So, in terms of beneficiaries, just for viewers' context, the most benefited sector would be tires, then the lubricants, and then the paints, as per what Vineet has guided. But let's say focus to Astra Microwave and Premier Explosives. They've signed an MOU, and the MOU is a strategic alliance to develop multiple products. Now, we have Anushi joining in with more details on that. Anushi?
Hey Mahima, so if you're seeing Astra Microwave and Premier Explosives, both are in focus today after joining the MOU as mentioned. Now this MOU is a strategic alliance to develop and sell multiple products jointly, so we will watch out for details on what these products exactly would pertain to. But while coming to the company specific fundamentals, first I'll come to Premier Explosives, moving focus over here. It's engaged in manufacturing of industrial explosives, and the order book of this currently stands at about 889 crore as of June 2024. Management expects a revenue, the EBITDA margins to be in the range of 20 to 23% as against the Q1 performance, wherein the margins were at 18%. So now, if we look at Astra Microwave, the company in focus over here. So if you have to look at Astra Microwave, they are also engaged in the business of design, development and manufacture of subsystems for the radio frequency segment. The total consolidated order book of this stands at about 2,365 crore, and they expect an order inflow for the 500 crore as we move forward. Revenue guidance remains at about 1,000 to 1,100 crore for FY25. If you look at its Q1 FY25 numbers, healthy set of numbers, 16% revenue growth, while margins have moved upwards from 2% to 15% this quarter, and net profit stood at about 7.2 crore as compared to a loss of about 6.74 crore. So these are the two companies in focus. Why the stocks are buzzing? Because of the joint development that they're going to make.
Right.
And yeah.
Right. Thank you so much, Anushi. Well, before I come to you, Vineet, let's cut across to Prime Minister Narendra Modi, who's addressing the India Semicon event 2024.
साथी अन्य अतिथिगण, देवी और सज्जनों, आप सबका नमस्कार। मैं सेमी से जुड़े सभी साथियों का विशेष रूप से अभिनंदन करता हूं। भारत दुनिया का 8वां देश है जहां ग्लोबल सेमीकंडक्टर इंडस्ट्री से जुड़ा ये भव्य आयोजन हो रहा है और मैं कह सकता हूं कि दिस इज द राइट टाइम टू बी इन इंडिया। आप सही समय पर सही जगह पर है। 21st सेंचुरी के भारत में द चिप्स आर नेवर डाउन और सिर्फ इतना ही नहीं है, आज का भारत दुनिया को भरोसा देता है व्हेन द चिप्स आर डाउन यू कैन बेट ऑन इंडिया। फ्रेंड्स, सेमीकंडक्टर की दुनिया से जुड़े आप लोगों का नाता डायोड से जरूर पड़ता है और आप जानते ही हैं डायोड में एनर्जी सिर्फ एक डायरेक्शन में ही जाती है, लेकिन भारत की सेमीकंडक्टर इंडस्ट्री में स्पेशल डायोड्स लगे हुए हैं। यहां हमारी एनर्जी दोनों डायरेक्शन में जाती है। आपके मन में आएगा कैसे? और ये भी बहुत इंटरेस्टिंग है। आप इन्वेस्ट करते हैं और वैल्यू क्रिएट करते हैं, वहीं सरकार आपको स्टेबल पॉलिसीज और ईज ऑफ डूइंग बिजनेस देती है। सेमीकंडक्टर की आपकी इंडस्ट्री इंटीग्रेटेड सर्किट से जुड़ी हुई है। भारत भी आपको एक इंटीग्रेटेड इकोसिस्टम देता है।
All right, that was PM Narendra Modi addressing the Semicon India 2024. Vineet, I'll come to you. You know, your views on Astra Microwave. You know, the company has given a guidance where the revenue will see an uptick of nearly 8% in FY25. So your view on the stock?
So, you know, they have a very strong order book, close to 2,000 odd crores, and they're adding 300-400 crores. And I'm sure, you know, that the order book will only keep adding up because, you know, they participate in many of the governments and defense's key programs. So, you know, they're into advanced aerial unit systems. They're into the Swati program where they're getting renewed orders. They're also part of the Kush program. So, where, you know, they're developing anti-drone system, jammers. And, you know, very soon, I think they will be going for the hard kill products also, where I think the tie-up with Premier might come through. You know, because Premier makes the detonators and the explosives. And these are actually aggressive products. So I think this would do well. We believe that their top line can improve by about 15 to 20% going ahead over the next 3 years. And, you know, the margins are also expected to move up because now it is coming into production, operating leverage will play through. And, you know, I think that it is very well positioned to benefit from this. Great company to look at.
Right, interesting that they've guided for an 8% growth, but what you are pegging is that it might grow by at least 15% in the next 3 years.